How to trade wheat CFDs. Wheat is the most important food grain in the world. It ranks second in total production as a cereal crop, behind maize and ahead of rice. Wheat is also the staple food of millions of people, and in this respect it is an important part of the daily diet of many millions more. All agricultural commodities can exhibit seasonal swings, but news of how well crops are doing moves the markets the most. The effect of climate change is likely to contribute to a general drift upward in pricing, as crops have traditionally been grown in areas where the weather is favourable to them. Any change in weather will impact the yields. Wheat is also a good example of a CFD commodity play on mainstream news. The wheat market presents good opportunities for CFD traders to apply leverage and make good profits. CFDs are traded in units that vary depending on the CFD itself. In the case of wheat, this is traded in bushels, or the symbol BU. One CFD is typically 100 bushels, which weighs around 3 tons. Wheat futures are traded in lots of 5,000 bushels, with a bushel weighing 60 pounds. Wheat CFD example. You bought one CFD contract for wheat at the price of 520 cents per bushel and sold it at the price of 522 cents. The difference is 2 cents. One CFD contains 5,000 bushels, so your profit is 5,000 multiplied by 2 cents, equaling $100. Long position. Purchase. An investor decides to buy a wheat CFD quoted 515 and 516. He buys 5 contracts at the price of 516 cents per bushel. Remember, one contract contains 5,000 bushels of wheat. The buy price of wheat is 516 cents. The quantity of contracts is 5. The value of 5 wheat contracts is 129,000. The margin required is $8,000. That's 2,300 multiplied by 5. The investor freezes only $8,000 on the account in order to get control over wheat in the value of $129,000. Position closing. 5 days later, wheat is quoted 525 to 526 cents per bushel, and the investor decides to close this position by selling an identical set of contracts, namely 5 contracts. The investor sells those at the bid price, i.e. 525 cents. Sell price for wheat is 525 cents. Quantity of contracts is 5. Wheat value is $131,250. That's 5.25 multiplied by 5 multiplied by 5,000. Net profit per the transaction is $2,250. The return is 28% on the capital invested in just 5 days. Like most agricultural crops, wheat is seasonal and vulnerable to weather and other supply interruptions, which can have tremendous impacts on future prices. Wheat is subject to similar laws, regulations and market forces as other commodities such as gold or oil. A firm grasp of the commodities market, coupled with knowledge of the wheat industry, can yield profits. All this adds up to ongoing opportunities for CFD traders to make money from trading commodities like wheat, but as you can see from the diverse news stories above, it is essential to stay abreast of what is happening in the world markets in order to be on the right side of the trade. Items such as poor harvest can be seen coming for some time before the market is hit.